Good morning. You listen to FloorDaily.net, and I'm Kemp Harr. This morning, my guest is John Baugh, Managing Director with Stifel Nicolaus, who focuses his analysis on the home furnishings and building products, which includes floor covering. John, how you doing?
I'm doing great, Kemp. Happy New Year.
Yeah, Happy New Year to you. I appreciate you spending time with us, starting off my first interview in 2019, and thought this would be a good way to start. Obviously, some of us concerned in watching the stock market and hearing that the Dow for the year is down a little bit more than 6%. And, you know, we heard from Jeff Lorberbaum at his last big conference. He said, turn the news off, you'll be a lot happier. Give us a flavor for what's going on in the stock market overall, and compare that to what's going on with the floor covering stocks.
Yeah, obviously a lot of angst in the stock market in general. I think it began with the Fed raising rates and taking away what we call the stimulus, the QE stimulus of buying bonds. They're working their way out of that, and it's having the impact of raising rates, which may be a little bit behind what weakening auto sales and housing, to name a few. We got a government shutdown. We got the China trade war. I think that's a big issue. Clearly, the Chinese economy is slowing. You can see what happened to Apple, but it impacts the world, and then there's concern around the world that GDP is slowing. We got an inverted yield curve. That's fancy language for longer rates being lower than intermediate rates or short rates, and that usually, but not always, precedes a recession. So there's that concern. Housing data has been weak, both on resales and starts, probably due to housing affordability issues. Right now, it would seem on housing that even though employment and wages are good, the affordability issue is making it tough to get people into homes. On the flip side, on the good news, our economy's strong. You saw the good jobs report number this morning. Christmas spending was quite good at retail. I think we'll see less inflationary pressure in 19 versus 18. It was a big drag on at least the manufacturers. And I think the Fed's done raising rates. We've already seen the 10-year Treasury, which ties closely to mortgage rates, back off from 3.24% at a peak in early November to about 2.65 recently. And all prices are still going up, and I think that's an important underlying stat for repair and remodel spending. So, like always, there's good with bad. The stock market does its own wild things. And, you know, there are concerns in the first half here, particularly, I think, in floor covering with all the imports we brought in from China in an attempt to beat the duties or tariffs. But overall, I'd say things are pretty good. I think Jeff's more or less right. If you read the headlines, it's horribly depressing. Reality is not that bad.
Yeah, so that's a top-line overview. Tell us, though, because I do have a little what I call a play account. The only thing in that account are floor covering stocks, and I just looked at it this morning. It's something I play with on TD Ameritrade. It's not doing very well. I mean, you know, like I say, the Dow's down 6%, but my flooring account, which is well balanced with all flooring companies, is down something like 40%. So,
well, I think that's the politically correct way to put it, Kemp. If we were offline, we might choose other words. Yeah, the average floor covering stock, by my calculation, was down close to 50% last year. You had names like Lumber Liquidators down 70%, Mohawk, one of the linchpins of the flooring industry, down 58% last year. And you know, the S&P Dow was off in that 6-7% range. So dramatic underperformance. I took a look at what earnings did, and simply looking backwards, not making estimates. And the valuations contraction in the stocks is what caused almost all of the stock price decline. In other words, the earnings on a trailing 12-month basis, using fourth quarter obviously as an estimate for 18, compared to the prior year, 17, the earnings were more or less flat. So all of that decline, almost a cut in half of stock price, was due to a cut in valuation. So what does all that mean? That just means there's a whole lot less risk in these names. Obviously, the market is betting that growth in earnings in 19 or beyond will slow. We'll see. That's an unknown. But clearly, these prices of these equities, in my mind, reflect a recession pending. And I'm not sure that's a certainty given the macro picture I'm looking at.
So now's a good time to get in, is what you're saying, if you want to invest in flooring.
Yeah, I mean, I think, look, there's no assurance that stock prices can't go down. One thing we know from history, stock market, individual stocks overreact on the upside and the downside. And the sentiment in the group is horrible. I think the first quarter will be a challenge in terms of perhaps demand weakening a little bit, and as I said, perhaps some over-inventoried positions, particularly of imported product. So what that means is you could see analysts like myself cutting estimates a little bit. Typically when that happens, stocks go down. But, again, we've seen such a bleed, 50% haircut. I think the risks are low. So if you're a longer-term investor, meaning beyond a quarter or two, I think these stocks are going to go up from here. The question is, if the economic data continues to weaken a little bit near term, which I expect it will, do we go even lower before we bottom out and go higher?
A couple of headwinds I guess we should look at is, like you mentioned, Q1. You have a lot of these companies that built inventory, especially in the hottest category, LVT, because of the fear of these 25% tariffs. So they've got warehouses full of product, and consumers going to wake up and look at his 401k and may decide that this flooring deferrable purchase is going to have to wait, right?
Yeah, that's the concern. That you look on the margin, the stock market spooks people, particularly those with money who have a lot of discretionary dollars to spend. They may hit the pause button. Obviously, seasonally, the first quarter is kind of slow. The housing start number is down year over year now. The last 6 months, that means floor covering going to that market will begin to track down year over year. And as you said, everybody anticipating the potential of a 25% duty from China brought in a lot of products. So, yeah, I think all those spell near-term, first quarter, maybe first half concerns. But again, I think you have to be a little careful about getting overly focused on near-term things, particularly when the equities, as I said, have been cut in half in valuation.
All right, so as you look for 19, we talked about Q1 being slow, but again, a pretty strong dollar. I know it dropped a little bit today, but it's been strong for a while. People are working, price of gasoline's low, so there's probably some good advice from Jeff. Turn off the news, and things may recover here for long.
I think so. And look, the big bet or the big question, all of the same, is are we going to go into a recession? I'm not perfectly trained to try to make that guess. I would argue those who are struggle with that guess as well. So it's an unknown. One thing I would point out is when we compare where we sit today in terms of the economy versus where we sat at the beginning of the Great Recession in 2006, we're dramatically different in terms of financial stability. The leverage of the consumer is lower. We don't have this housing bubble, if you will. And we do have certain markets that got frothy, like the West Coast cities in price, and we're seeing that come off. But I just don't see the same level of what I call fundamental or earnings risk to the floor covering names that obviously we had in that recession. So even if we get a recession, it may look more like a 2000, 2001, 2002, where home prices still went up. Interestingly, home prices have gone up in every single recession, save the Great Recession in the last 30 years. So I think if home prices don't decline, and I don't expect they will, for a lot of reasons, one of which we have a shortage of housing in this country, that's going to be a key underpinning for repair and remodel spending staying reasonably strong. And so even if we get a slowdown and or a mild recession, I'm not saying the stocks are going to go up in between now and then, but if we do get a recession, typically stocks bottom in the first quarter of a recession. And I don't know if that means we go lower, Kemp, because we're already down 50% from where we were last year. But even if we get a slowdown, I'm reasonably constructive that these equities will be higher in a year or two from now on average.
All right, John. Well, thanks for your read on this and helping me start out the year with an analysis on these publicly traded flooring companies. Again, been talking to John Baugh, Managing Director with Stifel Nicolaus, and you've been listening to Kemp Harr and FloorDaily.net.